SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome back from what was hopefully a lovely weekend. You're listening to the Financial Survival Network. It's Kerry Lutz. We're speaking with John Rubino. And hey, well, if you can fog a mirror, assuming you're not a vampire and your blood is circulating at 98.6 degrees Fahrenheit or close enough to it, you too can get an auto loan. Pretty soon, you too will be able to get a mortgage once again. And John Rubino of $collapse.com has written all about it. John, welcome back.
Hey, Kerry. Yeah, this is an interesting story that came out last week. It turns out that banks are having trouble finding people with good enough credit to lend to under the current standards. So instead of pulling back on their lending, the financial services industry is getting ready to change the way credit scores are calculated to make them higher. And in that way, let more and more people qualify for credit. And what they're going to do is they're going to say, well, if you've had a credit collection agency after you in the recent past, but you paid them, you settled with them, we'll just take that completely off your credit rating. And if you have medical bills that are outstanding and in collection one way or another, we'll take some of those out too. And in that way, raise your credit score, and then you can go to the bank and you can fit into the category for a given kind of loan that where maybe you didn't before, and you'll get the loan. And so you can borrow a car or borrow to buy a car, or get a home mortgage or whatever, where you possibly wouldn't have qualified in the past. So, and this is just emblematic of the way things work anymore. If our current standards are too stringent for a society that's borrowing huge amounts of money and getting less and less productive and just generally getting more and more decadent, well, instead of trying to clean up our act, we just lower the standards. And what's fascinating about this, it's not surprising given our history, but what's fascinating is that we just went through the results of this 5 or 6 years ago. We had the subprime mortgage bubble when anybody could get a loan. We lowered standards to the point where if you had a paycheck, and even if you didn't have a paycheck, you could walk in and get a home mortgage. And that blew up. And it almost took down the global financial system. And you would think we would have learned from that, and that what we would have learned is that we need high, strict standards when it comes to debt to prevent bad loans from being written on a vast scale and then blowing up on us. But instead, the lesson we seem to have learned is that we didn't lend enough. The way to have a growing, productive, happy society is to give loans to more and more people. Democratize credit, which was the term that we used to use back then. We were democratizing credit by making it available to more and more people, and we're back to doing the same thing. So I think it's reasonable to expect the results this time around to be the same as last time around. It's just a matter of how much debt gets written in the short run and when it blows up.
Yeah, credit is actually something that I've got vast experience with, John. I've been involved in it my entire life. And I can tell you that there are a number of people that fall upon hard times for sometimes not really reasons of their own making. And it just happens that way. Illness, relative illness, divorce, other things. But, these people often get into these problems again and again and again. I mean, I've actually written papers about this, that there's basically 4 different types of debtors who get into trouble. There is morally outraged person who goes to court and gets a judgment against them for something that really they believe wasn't their fault and shouldn't have happened, and then they just refuse to pay. Then there's what I call Joe Sixpack, who just does not have a good command of his finances. Then there's a person who just falls upon hard times. And then there's this other level called scum, who just are professionals. And the problem is when you lower standards, you're going to let number 4 in there. You're taking the pressure off of Joe Sixpack to really get Joe's finances in order. And, you really are letting those people who are unfortunates off the hook and really not allowing them to learn the lessons of what happened during their last crisis or calamity so that they won't take appropriate steps to prevent it from happening again. And in your article there, They're Lying to Us, Part 5, you really kind of explain that what you need to be doing in a time like now is actually cutting back your use of credit, only using credit to purchase productive assets like a car that will enable you to travel, commute, to get a better job, okay? Not being out there buying a house beyond your means that isn't going to make you any more productive, right?
Well, yeah. And in a well-run society, credit should be hard to get. It should be used just for productive purposes and not for consumption. And that's what we've gotten away from, because basically Keynesian economic theory, which is the dominant theory that animates our public policy right now, says that basically all debt is good because it's used to buy stuff. Anytime you borrow money, you buy something with it, and that gets the economy going. And the fact that the economy is growing is the crucial indicator of health. Not why it's growing or where the money came from or anything like that. The balance sheet of a society is not important in Keynesian theory. And so that tends to be what is ignored. We just want to encourage people to borrow and to spend, and then things will grow and we'll be okay. And of course, we've been doing this for 30 years and increasing the amount of debt in the system year after year after year. And when you borrow too much money, whether you're an individual or a family or a country, things get harder because you've got these interest payments you've got to make, and that comes out of money that you would have spent on other things, and you just feel more and more limited, and life gets harder and harder. And that's where we are now as a society. It's just hard to grow because we've already borrowed all this money. But the guys in charge don't see that because they really aren't even aware of how much we borrowed. It's just not part of the analytical framework.
Exactly.
And so their response to slow growth is to speed up growth by borrowing more money and spending it. And so it shouldn't be a surprise that lowering lending standards is one of the tools that gets pulled out the minute things slow down. Back in the middle of the previous decade, the government was leaning hard on the banks via the Community Reinvestment Act to lend more and more money to people in areas where loans weren't flowing that freely. And they were actually telling banks to stop looking at archaic measurements like ability to pay. They were actually telling banks, don't bother trying to figure out whether these guys can pay their loans back or not. Just give them money.
That's so yesterday. That's out of style.
Yeah. And so we're back to that now, or we're heading back to that, where the government is pressuring the banking system, and the banks themselves are going along with it because they love to make those fees, and then hand off the loans to the government. And so the banks are facing a lot of pressure from a lot of different directions to lower standards and to lend money to basically anybody with a heartbeat. We're heading for that again. And, the result's always the same. It'll end the same way the last few bubbles have ended.
There's really no other way that it can end, because when debt grows faster than GDP, how do you pay it off? And the answer is you don't. You wind up liquidating it by other means, bankruptcy, charge-offs, etc. And, the story is always the same, and it always ends the same. And, when there is no limit to the amount of currency units that you can create, this is what happens. And I think you call it in your book the money bubble.
Mm-hmm. That's what we're in. Yeah.
Yeah.
And it will burst, and it will change everything. When our money stops working. Because in the past, we've had a lot of financial bubbles, but it's always been limited to one or two financial instruments, for instance, real estate loans or tech stocks or whatever. When those things burst, that sector gets really whacked. But the bubble on which those smaller bubbles have taken place is the money bubble, fiat currencies being expanded around the world, and credit within different fiat currency regimes expanding around the world. And so when this bursts, and when we can't use dollars anymore for the many of the functions of money, then everything changes. And that's what we're headed for. So whether this is the straw that breaks the money bubble's back, who knows? It's impossible to tell what's going to set off the final cataclysm that wipes out this debt-based, fiat currency-based system. But something is coming that will do that, and I don't think it'll be that much longer. When we're seeing debt levels, as you said, continue to grow faster than GDP, and we're in a box where so much debt has been taken out, either on variable rate terms or very short term, so it has to be rolled over continuously, which is in effect variable rate, which means if interest rates ever go up, we've got tens of trillions of dollars of debt that has to be rolled over every year globally at higher and higher interest rates. And that alone will derail any kind of an expansion that might have been going on at the time. So we have no choice but to keep interest rates low forever, and which means easy credit forever, which means more and more people borrowing who shouldn't be borrowing in the first place, which means more unstable asset bubbles out there. So instability is probably the only thing that you can say is a guarantee in the next 5 or 10 years. Things will get more and more volatile until something happens to blow up the system.
Exactly. And more on this when we continue on the Financial Survival Network.
FSN Radio. It's all about what's next.
Audible's back as a sponsor. Just go to audiblepodcast.com/FSN and you'll see they've got over 150,000 titles to choose from fiction, nonfiction, bestsellers, every category imaginable. They've got free apps. You can download and listen on your iPhone, iPad, Android, Windows Phone, every device imaginable. And unlike a streaming or rental service, with Audible, you own your books. So you know that I've been an Audible fan for years now. I've listened to over 310 books since I've had it. Last one that I listened to was called The Frackers, and I will give a hat tip to Jason Burak for that one. An incredible book about the history of fracking in America, in Texas, and how it developed in North Dakota. It's a book that you really got to check out. I'm reading one right now, or I should say listening to it, called The Sons of Wichita, about the Koch brothers and how that family developed an immense business worth God knows how much, hundreds of billions of dollars. Incredible book. There's so many great books. I love the Joseph Finder books, the Harry Bosch series by Michael Connolly, but you've got so many books to choose from that you'll have to find one. And Audible's got an incredible offer for you right now. Go to audiblepodcast.fsn to take advantage of it right now. Okay. The way it works is really simple. You get a free audiobook of your choice and a free 30-day trial membership. So check it out now. It's really great. It's easy to use. And look, if you're like me, you don't have the time to read as much as you used to. But if you're driving in the car or you're sitting out by the pool or the beach, you put on a book. It's an amazing service. I love it. You will too. Go to audiblepodcast.com/FSN. Take advantage of that free book and that free 1 month's membership now. You're going to love it. I promise you. And tell me some books that you like, that you've listened. I'll tell you some of mine. If you send me an email today to KHL@kerrylutz.com, I will give you my top 10 Audible picks. And I guarantee you're going to love them. Check it out now. audiblepodcast.com/FSN.
The Financial Survival Network. It's all about what's next.
We're back. We're speaking with John Rubino of dollarcollapse.com and author of The Money Bubble. So, we know what's going to happen with credit. It always plays out the same way, these bubbles. And this is a clear case of cause and effect. And it's not even the Federal Reserve that's doing it. It is actually the regulatory apparatus of the federal government that's basically redefining credit scores before our very eyes. What many of you might not be aware of is that there are dozens of different credit scores out there that the credit bureaus and outfits like FICO, which is called Fair Isaacson, have worked on. And they don't just use FICO now, they use many of them. Some are which are better. FICO just tries to give you a approximation of somebody's odds of going into default over the next 18 months. That's its only purpose. So really anything that appears on your credit report only has effect for 18 months effectively. But going on to what's happening in Iraq now, fascinating. Now we're back in Iraq. I mean, not boots on the ground yet, if that's going to happen, which very well might, but we're bombing Iraq. And rather than having evil, bad Saddam Hussein, who was an evil person, let's face it, there's nothing you can do to justify him. And thank goodness the South American countries don't treat their returning defeated soccer stars the way that the Iraqis did, or there'd be a lot of dead soccer stars in South America now. But, we got this ISIS group, which appears to be, the devil incarnate. They're just killing everyone in sight who won't convert by the sword or won't toe the line. I mean, they're just about the worst of the worst we've ever seen. I mean, what better target? I mean, nobody can object to killing these guys, John, right?
Yeah, Kerry. My God, it turns out we wasted $3 trillion on Iraq and actually made things worse.
Yeah.
And one of the lessons that we probably should have learned maybe in the 1950s is that whenever we intervene in the Middle East, the odds are that we're going to make things worse. And that's the way it's gone time after time after time, where we get in there and we decide that one group in some conflict is the good guys and one group is the bad guys, and we help the good guys. And by giving them a lot of high-tech weapons, primarily. Yeah. And they, as soon as they win, turn into the bad guys. And then we end up intervening against them. And so the Middle East is awash in U.S. weaponry. So anybody who takes over anything ends up with a whole bunch of U.S. gear. And that's what's happening now. This ISIS group is basically rolling through Iraq. Yeah. And they're executing anybody who doesn't adhere to their fundamentalist Islamic faith, and they're kicking anybody else out that they feel like, and blowing up mosques, and generally behaving like barbarians. And they're starting to encroach on areas that we consider vital. It looks like they may take over Kurdistan, or they're in danger of that. And the Kurds are guys we like. They're an island of stability in Iraq, and their capital city is now threatened by ISIS. And of course, Baghdad, they're not that far from Baghdad, and we built basically what is a city within the city of Baghdad as our embassy there. Billions and billions of dollars and acres of land and buildings. And so we feel like it's in our national interest to stop that from being taken over. So now we're back to bombing ISIS. And in effect, we're bombing our own equipment with newer equipment. So we've got our drones up there shooting our armored personnel carriers and tanks and things off the roads. And so, we're back again. And really, we spent $3 trillion or more now on this project, and things are actually getting worse. So I don't know what the solution is, because we don't want to invade again. No. But will we have to?
There's no appetite for that, for sure.
But when the alternative is a radical Islamic state in control of the third or fourth largest oil reserves in the world, who knows what we decide at that point? That's going to be a lot of pressure on the Joint Chiefs of Staff and the national security apparatus in the U.S. Our guys are going to be sitting around a table going, all right, we don't want to go back in there, but maybe we have to, And as the father of 2 draft age sons, I hate this. Yeah. I really can't stand seeing stuff like this, because, if it spins out of control and if it pulls Iran into it, because ISIS and Iran are enemies. So let an entity that is the enemy of Iran take over Iraq, and then who knows? You might see Islamic war in the Middle East that pulls in Saudi Arabia and Iran, and then threatens Israel. And at that point, basically all bets are off globally. Who knows what happens then? Yeah. These guys, they all have high-tech U.S. weaponry, and they're all almost capable of building weapons of mass destruction, more so every day. So, we're looking at a potential nightmare there. And you've got to trace it back to the U.S. printing press.
Oh, totally.
Because, we have had an unlimited credit card since the 1970s with which to build up a military apparatus that was untouchable. And that made us feel omnipotent and allowed us to think we could intervene all over the world and do whatever we wanted with impunity. And so we did. We blundered around the world for the last 30 years, basically intimidating anybody we want to, killing whoever gets in our way, and making enemies everywhere. And now the blowback has come.
Yeah,
and
the chickens have come home to roost.
Yeah. And there's really no solution for this. I mean, obviously the solution is just to get out of the Middle East, but to the guys in charge who consider the ability to project American power around the world sacrosanct, something that cannot be questioned, pulling out of the Middle East isn't an option. So the only other option is to stay in and win, and so they're actually going to try to win this somehow, some way, whatever.
The unwinnable.
However we define winning. But we're making enemies at a rate that's faster than people are being killed in the wars over there. So unless we want to step up the killing to a rate that's higher than the rate of enemy formation, it never gets better.
It's such a mess. And, it all goes back to going there in the first place, probably the worst move we could have ever done. But they conned the public into it. And, here we are. We own it now. As Colin Powell said, it looks like there might be a coup underway in Iraq to take out the democratically elected government that we so heavily invested in. And what's next? I can't even imagine, but obviously nothing good. And then what? Then who are you going to wind up with there? I just can't even imagine. It's just going from bad to worse, and with no end in sight.
And Kerry, the stock market is up today.
Yeah. So obviously they know something we don't.
About us. Yeah. Well, no, what it is bad news is good news, because anything that stresses out the U.S. government leads to more money creation. Mm-hmm. And that money flows into equities. So naturally, if there's geopolitical tension in the world, you buy stocks, because that means the Fed is going to open the floodgates at some point. The more scared we are, the more we're spending militarily, the more money we have to print, and more pressure on equities to go up. There is. So amazing what the thought processes that are going on out there.
Certain perverse logic to it. But I'll tell you what, getting a coalition together to go after ISIS would be a lot easier than a coalition to take out Saddam Hussein,
But the consequences of it are completely unpredictable. So all you can say with certainty is that it's going to cost a fortune, and that it probably won't solve anything.
No. In the long run, no. In the long run, we need to get out of there and let them work it out and come up with our own energy alternatives, so that basically we don't really care what happens there. Right?
Yeah, can you imagine what $3 trillion would have done to U.S. energy independence? We had either used that as research money to make alternative energy much, much cheaper, or just slap solar panels on every roof across the Sun Belt. We could have done that for $3 trillion and then some.
On every hoodie in America. Every car roof. And
we'd be driving electric cars, which are very nice. I drove one the other day. They're actually more fun to drive than internal combustion engines. So the clean energy economy of 10 years from now is going to be very cool, and we could have used that money to get from here to there in 3 years instead of 10 years. But
you are right. Well, hey, let's talk some more about this on our return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every day, the Financial Survival Network reaches tens of thousands of listeners and would like to reach thousands more. By adding a video channel and more show hosts, we think we can make that happen. But we need your help. If you're a regular listener of FSN and would like to help, please go to clubfsn.com to donate monthly from $1 to $100. The choice is yours, but every bit counts. There are premiums available for you, but the biggest one by far is you helping FSN get the message out to your friends and family to be prepared, hopeful, and ready. That's what FSN is all about, and that's why you listen. So go to clubfsn.com and help us get the word out before it's too late.
The Financial Survival Network. It's all about what's next.
We're back with John Rubino, and this clean energy economy, which the government, if they invested that $3 trillion they would have just wasted it all anyway. But if the economy had that 3 trillion, if it wasn't printed out of thin air, presumably other things would have happened, right? We wouldn't have a crowding out. What would have happened, John, if that 3 trillion stayed in the economy?
Well, we'd have $3 trillion less debt,
right,
for one thing. So the government would be under a lot less pressure. We'd be under a lot less danger. And interest rates could have been allowed to go up to healthy levels without as much danger of us having to roll over, our short-term borrowing at higher and higher rates and be blown up by it. And so it's conceivable. I think that actually $3 trillion one way or another wouldn't save us because we owe 50, 70, 150 trillion, depending on how you count debt.
Right.
But it would have helped at the margin. It would have made us a little better off than we are right now. And had we had that money in the private sector and with whatever incentives it would take to make it happen, spent that money on stuff that would have helped our energy independence in the long term. By the way, which fracking and stuff does not do. I don't know if we have time to go into the economics of shale oil and fracking and stuff like that.
Yeah, well, sure.
But they don't work. It takes as much energy input to get a unit of energy out of the ground with those technologies. So it doesn't really work. It produces more oil and gas, but at a cost that is really prohibitive in the long run. Mm-hmm. So that's, at best, a very, very temporary solution to our dependence on foreign energy. Mm-hmm. So we need things that go on forever at a predictable cost, and that is clean tech, and conservation.
Yeah,
conservation is actually the cheapest form of energy because if you just get more efficient, you in effect that's exactly the same thing as producing more energy. You just use less. So they call that negawatts in the power business. And that we could have, $3 trillion thrown at retrofitting buildings to use less energy and other similar programs that would make us more efficient. That would have made a big difference. You can go on and on. Or anyhow, that's a fun game to play that just makes you bitter at the end because we didn't use that $3 trillion for productive projects. We used it to invade a country and make a bigger mess than was there to start with. And now we have to go back in. And our kids might be on the ground in the not too distant future there, fighting people who all look the same and all speak the same language and who they can't tell apart. And some of them are friendly and some of them are enemies. And, it's no surprise that our soldiers are coming back with PTSD because that must be the most stressful situation imaginable where the guy who's walking up to you might be getting ready to blow himself up, or he might be coming up to help you in some important way.
Yeah,
and they look exactly the same in either case. They're speaking the same language, and you can't tell. So what do? You have to make these split-second decisions with your life on the line over and over and over again.
Yeah, it's got to drive you crazy.
Oh, my God. The idea of my kids in that situation, tolerable. I can't think about it.
It's interesting. I was having a discussion with somebody about prohibition, who she was a relative newcomer to the country, very patriotic, but she really knew nothing about prohibition. Is explaining that, in a way, prohibition was a reaction to all these guys coming back from World War I with PTSD. They didn't have any medication available to them other than alcohol to try to repress all the horrible memories of World War I. So you had all of these vets really just burying their memories in a bottle. And what did? They outlaw alcohol. And that worked so well that, basically FDR, one of his main planks of his platform in 1933 was repeal of prohibition of the Volstead Act. And, then they had all these government workers working on prohibition. They had to do something with them. So, hey, let's just have drug prohibition, particularly cannabis. And, we're still dealing with that prohibition, the blowback from that, basically 80 years later. And we're just starting to come to our senses there, and that in a way you could trace back to World War I,
Yeah. That makes sense, And I think you can also make the case now that we've played a big hand or had a big role in largely destroying a lot of Latin American countries.
Oh, yes.
We, with our demand for their drugs, have created mafias, basically, that are so powerful the governments can't touch them.
Mm-hmm.
And so you get countries that are basically run by drug gangs.
Yeah.
And you can trace that back to us. It's not completely Ecuador or Colombia or Mexico's fault. It's the fact that we'll buy this stuff from them and for billions and billions of dollars, which funnels huge amounts of money into the bad guys. So yeah. One of the few good things about hard times is that it usually leads to the legalization of victimless crimes. The government just realizes that it's powerless in so many ways, and it starts looking for ways to just wash its hands of responsibility that it can't handle. And one of those things is drugs being legalized, and also prostitution and gambling and things like that really are mostly personal choice, and that shouldn't be in the realm of public policy. So at least we're seeing that start to spread.
Mm-hmm. Oh no, couldn't agree more. And the futility of trying to stamp out these things and criminalizing large portions of the population in the name of protecting them from themselves, is just a pointless endeavor that that just does so much more harm than good. And we see it over and over again. It just really, really has destroyed millions of lives. Millions.
Yeah.
It's insane. So
yeah, it truly is.
Yeah. So, and all from the printing press, all from the income tax, the Federal Reserve, and the welfare state leads us into decadence and a war on our own citizenry.
Mm-hmm.
So.
Yeah, and the pendulum will swing the other way, because it always does. We'll create a generation that's sort of like the Depression generation, our parents, who have been burned by credit and who understand the dangers of borrowing too much money. So, and unfortunately, that's probably our kids who are going to grow up in a time when debt becomes this traumatic thing that terrifies you to the point that you don't want to mess with it anymore. Actually, a really quick story, if we've got time,
Sure.
Kerry. Back in the 1970s, I was taking out my first student loan. My mother was in the bank co-signing with me, and the bank loan officer pushed the document back to her and said, Annetta, you didn't fill in this section here. And she said, oh, I don't have anything to put there. It was her credit history. She had never borrowed a penny in her entire life. We didn't have credit cards, car loans, home mortgage, nothing like that. They had paid cash with everything.
Wow.
And that wasn't that uncommon back then, and now it's unheard of. You can't find anybody who has not borrowed money, and so the pendulum will swing the other way to the point where borrowing a lot of money is a sign of decadence, and it's not. Having a lot of stuff that looks good but is made with borrowed money is not going to be a sign of status anymore. So, like the radio guy. Dave Ramsey says that, the paid off mortgage has replaced the BMW as the new status symbol. We're heading for that. And unfortunately, there's a lot of pain in between now and then,
What about people, you remember them, who didn't trust banks, who wouldn't put their money in banks because they had been wiped out during the Depression. Remember those people?
Oh, sure. Yeah. And that happened a lot back then. See, what we did back then, banks were basically private entities that weren't guaranteed, and they could go bust and you could lose everything. So we, in response to that, fixed the problem of banks going bust by creating deposit insurance.
Mm-hmm.
But at the same time, we eliminated the guarantee that $1 would be worth the same amount 5 years from now as it is today. And so, they can pay you back if your bank goes bust, but it will be in dollars that aren't worth anything like the dollars that you put into the bank in the first place.
A mere formality. Formality.
But so that's going to create a different mindset in the future, where perhaps we trust banks to give us our money back, but we don't trust the government to maintain the value of the currency.
Yeah, exactly.
And so we're going to insist on gold-backed currencies, because that's the only way to force governments to maintain the value of the currency. And otherwise low debt across the board. That's going to be a much healthier society. I'm actually looking forward to the world of 2025 or whatever. Just not the world of
getting there.
2021.
Just getting there is going to be the bitch, because it's going to be a lot of pain and a lot of changes that a lot of you out there are not going to be able to make, because you're not prepared. And you don't want to make it because there's a lot of ease and a lot of no pain, and you've just been promised too much. Anyway, John, we find you at dollarcollapse.com. Check out John's book, The Money Bubble, and go to financialsurvivalnetwork.com, sign up for a newsletter. I'm working on it now, and it's going to be all about credit because it's something you really need to start thinking about. Maybe you should get your credit while you can, and then it'll help you get through the storm. It's not such a bad idea as long as you're getting assets that will help you get through the storm. I think that really is the key, and help you be productive once the storm hits. And John, we will talk to you next Monday, so be well.
Thanks, Kerry. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.